doesn't surprise me that the impact is relatively larger for China. They're more dependent on trade than we are. I'd be cautious, though, about that PMI number, that business sentiment number for March. You know, it reflects a lot of production increase as a result of an expected reduction in VAT, value-added tax deduction reduction, if I can say that, beginning April 1. And so what happened is it incentivized producers to move forward a lot of their production ahead of that loss in some of their deductions. So the production side of that was very strong, but the orders, the new orders, still weak in China.
Okay.
We're not quite seeing a bottom yet.
So that actually feeds into my next question, Paul, which is on Germany, which is awful. I can't even believe some of the numbers that they're putting up. I don't understand the abruptness and the severity of the downturn. If you look at the PMI data there, which points to a 1% contraction in the economy, or the factory orders overnight, which were down 4% on the month and 8% on the year. That's the biggest drop since '09. What's going on?
Yeah, that's right. And China has a lot to do with that. I think there's more to it than that, though. U.S. auto sales appeared to peak in 2015 and have been in a decline except for Hurricane Harvey. And now we're seeing global auto sales starting to weaken a little bit, and that's going to hit Europe hard, and particularly Germany.
And Seema, isn't the German stock market also up this year? I mean, I'll check it, but the DAX seems to be taking this in stride. Yeah, it's up 13% year to date.
I think similar to what we're seeing in China, there's still this expectation that the central bank in Europe, the European Central Bank, will continue to stay accommodative and will stay on the sideline, ready to jump in as they need to kind of provide a floor to Europe's economic distress that they're seeing play out. What's interesting about this Germany story is that in prior economic downturns in Europe, really led by Greece, Cyprus, these smaller economies, and the concern that it would bleed into the rest of Europe.
Right.
This time, it's the engine of growth, which is Germany. So to your point, it really showcases a larger problem, and also the interesting trade dynamic between Germany and China and just how interconnected those two economies are.
It's front and center.